You don't want to miss this episode. We're going to dig into 3 major events and how they're going to affect the price of Bitcoin in 2024. Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and joining me, as always, Christina Wyatt. Christina, how you doing today?
Hey, Darren. I'm doing awesome. How are you doing?
I'm doing awesome. We're going to do another episode on Bitcoin. And before we get started, let's talk about how we're not Bitcoin experts.
Yes, we've got to add a disclaimer here just because we're not Bitcoin experts. So, take it with a grain of salt. We're going to share our information, share what you know. Actually, I'm going to learn a bit more too, because every time we do these, you share your knowledge on Bitcoin, which is awesome. But we're not experts. So keep that in mind. Do your due diligence whenever you're working and investing in anything, really. Make sure that you do your own due diligence.
Yeah, we are experts at infinite banking, and we would love to talk to anyone about that. As far as Bitcoin comes, this is informational purposes. Do your own due diligence, all that stuff.
Yes. Before we jump in any further, though, I will remind everybody, if you're listening on your favorite podcast platform, please make sure that you subscribe and leave that 5-star review. If you're listening or watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. And don't forget to follow us on our socials at Control and Compound on Instagram and TikTok. All right, now we can jump into the Bitcoin, the good stuff.
Okay, so before we get into this, the 3 events that I think will really have a big impact on Bitcoin in 2024, let's go back to a little economics 101. So I've taken a lot of economics courses. I have an economics degree, and I want to go back to something as simple as supply and demand curve. So, the old supply and demand curves, you get supply, you get demand, and then you get that calculates your price. So the idea being, if supply is fixed and demand goes up, your price is going to go up, right? So we got to go look back during COVID and used cars or cars in general. What happened? Well, the supply was basically stopped because of the supply chain issues, the chip issues. So we had supply fixed and a huge demand because people had more money, people wanted to buy cars. So the price shot up. Same with decks, same with RVs, all pools, all these things, huge increase in price because there was a big increase in demand and supply couldn't keep up. Now, if supply can keep up, like sometimes there's a really demand for some goods, but supply can keep up, well, great. The manufacturers produce a lot more. Price doesn't necessarily go up, but they sell more. So supply and demand, how supply and demand is going to totally impact price.
Yes. Yeah. Perfect. That makes sense. But what does that have to do with Bitcoin?
Well, I just thought I'd share some information from my university days. Okay, so what does that have to do with Bitcoin? Well, the same theory, again, we're just talking theories here. The same theory should work with Bitcoin, right? You've got supply and demand of Bitcoin. Well, if supply is fixed or limited and demand goes up, we should see an increase in the price of Bitcoin. If demand goes down, we should see a decrease in the price of Bitcoin. So let's look at Bitcoin, first of all, on the supply side. Well, there's like between 19 and 20 million Bitcoins out there today. And the maximum number of Bitcoins that will ever be mined, okay, is 21 million. So we're getting close to that, 21 million. It'll be many years before we actually get it because of the halving we'll talk about later. But we're 19 point some million out of a 21 million total supply. So it's not like any other manufactured good where they can just say, oh, we're going to, produce twice as many. Bitcoin, unless something drastic changes, 21 million is the fixed limit. So if we look at the kind of the 3 events that'll affect supply and demand, let's look at the first event.
Yeah, for sure. So it makes sense. We got the economics 101. Supply and demand is going to be an issue. We're going to run out 21 million, but you said that's not in 2024. So obviously that's not the issue for this year. So no. What are our issues this year for the supply and demand?
So we've got one big one that already happened, and that is the Bitcoin ETF in the US. So we talked about this a lot last year too. We expected this was coming. So an ETF, an exchange traded fund, is basically you can buy it just like you can buy a stock with your discount brokerage or your regular broker. You can go in and buy now a Bitcoin ETF, which tracks the price of Bitcoin. So that from a demand standpoint is making it really easy for people to have exposure to Bitcoin without actually physically buying the Bitcoin, doing the cold storage. That's intimidating and sends a lot of people, or just doesn't interest a lot of people to learn all that new stuff. They like Bitcoin, or they like the upside potential of Bitcoin, but they don't want to get the cold storage and the password and what if I lose it and all that stuff. So, in theory, this should really drive up the demand for Bitcoin because people are going to buy the ETF. And if we look at the states in particular, because this is where this Bitcoin ETF was just approved, billions of dollars went into it in the first day it was on the market in January when they listed it. Billions of dollars went into these Bitcoin ETFs. But what it does is it makes it easier for people to buy the ETF. And if we look at the baby boomers, for instance, the baby boomers in the States, I think there's about $150 trillion of net worth. And of that 150 trillion, the baby boomers have half of it. So the baby boomers, which tend to be the older people, or are the older people now, they have about 78 trillion in wealth. And of that wealth, they have about 20 trillion in the stock market. So $20 trillion. So let's say this Bitcoin ETF makes it easier for people to say, okay, maybe I should have a portion of my portfolio in Bitcoin. Bitcoin is an asset class. What if we move 1, 2, 3%, 5% at some point over into the Bitcoin ETF to make it easy? Well, 5% of 20 trillion that the baby boomers have in the stock market is $1 trillion. So that would be $1 trillion going towards Bitcoin if 5%. Now, I'm not saying that's going to happen, but it's easier for that to happen now because you've got the Bitcoin ETF for the Americans where they can move some money over into the ETF. And then for the corporations, well, there's lots of corporations that want exposure to Bitcoin as well. And whether you're a small corporation or a large corporation now, really simple to buy an Bitcoin ETF, no different than buying the S&P 500 ETF or the TSX 300 ETF. You can just buy the index or the Bitcoin ETF. So going to make it easier for them to buy personally, and it's going to make it easier for them to buy corporately. So this could increase the demand.
Yeah, and when you think of it, you're going to have, with it being an ETF, you're going to have portfolio managers, financial advisors sitting down with their clients this year, having conversations about diversification. And I would imagine they're probably going to bring Bitcoin up, which the moment that those conversations start happening and, trusted individuals are saying this is what's being used, I would think that you're going to see that baby boomer shift because that's when it's going to happen.
Yeah, I mean, one of the things that's going to drive up the price of Bitcoin is Bitcoin becomes accepted in more in the mainstream. So from an individuals, that Bitcoin is an acceptable asset class, and from corporations, Bitcoin is an acceptable asset class. And if these ETFs make that easier for individuals and corporations to have exposure to Bitcoin, well, Bitcoin's going to become more mainstream. And if that happens, the demand's going to go up.
Exactly. So that's event number one. Now, what we said, we have 3 events. So what is the next event?
Well, the next event, we're going to geek out on a little accounting rules here, so bear with me. I'm gonna try to just keep it simple. But the next major event is the new Financial Accounting Standards Board, so the FASB they call it. The Financial Accounting Standards Board are going to change the rules for Bitcoin, or they already changed the rules for Bitcoin, and it becomes effective December 15th, 2024.
Okay, so let's bring it back to what the current rules as of right now are up till December. So our rules that we have right now are going to be in effect until December of this year, and then they're going to switch. So what are we at right now for rules?
Yeah, and I'll step back even further. So let's just talk about the FASB. Like, what are they? So the FASB, Financial Accounting Standards Board, they're the ones that set the rules that the SEC looks to set the rules for all the accounting. All the way publicly traded firms report their accounting. Okay? You might have heard the term GAAP, GAAP, generally accepted accounting principles. So they're the ones that set that for the accounting rules on how you report things. And we're going to specifically dig into Bitcoin. So to answer your question, what are the current rules or the old rules for Bitcoin? Bitcoin on your financial statements, it was a weird thing. It was reported almost like the same as a trademark or goodwill. It wasn't reported as an asset. It was reported as this trademark or goodwill in that same category. So to give you an example that might help, if a company bought Bitcoin at 36,000 and then the next quarter it dropped to 16,000. Well, what they had to do is they had to show that loss as an impairment. And an impairment, it's a fancy term for saying they had to show it as a loss and flow it through their income statement. So now when they report their quarterly earnings, they're going to show a huge loss because of that decrease in value, even though they didn't sell it, right? Typically, if you owned an asset, if you owned, shares in Apple and Apple went down, well, your balance sheet would go down, but you're not reporting a loss. So now, the way current rules in Bitcoin, if Bitcoin goes down, the company actually has to report a loss, not a decrease in assets, but a loss. So now, what happens? Bad headlines. You've got companies out there going, we reported this big loss. The CEO is upset. The shareholders are upset. They didn't actually sell anything, so it's really just a paper loss. But that was the way they had to report it. So it affected a lot of CEOs and corporations from buying Bitcoin. And then the rules are actually, they even get worse than that. Because in my example, where Bitcoin dropped from 36 to 16 and you had to show a big loss, well, if Bitcoin went back up to 26,000 the next quarter, you don't get to write that up on your books and you don't get to show a profit.
Ugh.
So you get the downside, but you don't get the upside. So it was really tough for some corporations to justify buying that. And like the biggest example would be Michael Saylor's company, MicroStrategy. They, one quarter they reported almost $1 billion loss, and they didn't sell any Bitcoin, but because the way the accounting rules are. So many believe this has stopped. These rules have stopped corporations from buying Bitcoin.
Well, yeah, it would, because you don't want your company looking negatively for something that has nothing to do with actual profits, right? Like that would stop me from doing it as well.
Yeah,
right?
not good for the CEO bonus or shareholder meeting to show up with a big loss.
Yeah, no, absolutely. So I take it that the rules might get better than this year. If this is going to be a supply demand issue, what are the rules changing to?
Yeah, so the rules starting December 15th of this year, 2024, are Bitcoin's going to report it like any other asset. So it's going to be reported on your balance sheet, not your income statement. It's going to be reported as an asset, just like if you own shares in Coca-Cola or IBM or Microsoft or whatever company, the banks, whatever stock you have, if it's worth $1 billion, when you buy it and the next quarter it's worth 800 million, you just report that on your balance sheet, but it doesn't affect your profit and loss. It's going to be treated like every other asset, okay? Which again is Bitcoin now being treated like other assets. So is that going to allow it to be more mainstream? It's certainly going to allow corporations. It's going to be easier for corporations to buy Bitcoin now with the new accounting rules.
Well, and the ETFs too,
And the
right?
ETFs,
So you,
yeah.
you throw those in the mix
So
as
we've
well.
got two ways
Yeah.
now. It's easier for corporations to have an exposure to Bitcoin.
Gotcha. Okay. Well, that's a positive event, I would say, on the Bitcoin front.
Absolutely.
So what about our third event then?
Yeah, and the third event we've talked about in the past, but that's this halving, right? So every so often, about roughly every 4 years, they do this halving event where the way they actually make Bitcoin is you have these Bitcoin miners that solve these complicated mathematical equations, and they get rewarded Bitcoin. So the reward right now is 6.25. Well, that reward starting in April of 2024 is when the next halving event happens. That's going to be cut in half to 3.125. So now the amount of Bitcoins coming out with these miners is going to decrease. And again, that's as we're approaching this 21 million. It's going to continue roughly every 4 years to halve and halve and halve. So we're a ways off from actually hitting that 20 million. But if you look at the math, we're between 19 and 20 million now. We're only going to 21, and the rewards now is cut in half. So we're cutting down that supply. So really, that's limiting the supply now, and we're approaching the hard limit on supply coming up. So that's really on the supply side where Bitcoin is really going to be limited on the supply side.
And we're ramping up the demand on the other side by changing the accounting rules and bringing in those ETFs so it's accessible to everybody,
Yeah,
right?
so the
we've got
theory
economics 101
Yeah.
right here.
So the theory being, well, if we fixed or limit the growth of the supply curve and we do something to drastically improve the demand, like we just talked about, the ETFs, the new accounting rules makes it easier for corporations to buy ETFs or owning the Bitcoin directly, and we limit the supply, increase in demand, limit supply, the price in theory should go up. Now, that's a theory.
Yes.
Now, we just want to caution you.
Disclaimer, theory.
At the beginning of this podcast, we said we're not Bitcoin experts. There's also theories out there saying Bitcoin is worthless. It's just a scam and it's going to zero. So we're not telling you should buy Bitcoin. What I'm telling you is there's lots of people out there that believe if you increase demand, this will increase demand, and we know supply is limited. Therefore, we're going to see an increase in Bitcoin. But to me, it all comes back to, is Bitcoin going to be socially accepted by individuals and by corporations? And if so, then we're going to see a massive increase in demand through the next number of years or through the next 20, 30 years. But we know supply is limited. So if we have an increase in demand, we know supply is limited. Bitcoin will go up if it becomes socially accepted as individuals and corporations.
Yeah, great information to know. Like it's good. You want to take the time to understand it because it's something people are talking about and people are doing. So it's great information.
All right, so that's Bitcoin or economics and Bitcoin 101. Hope you learned something. Do your own due diligence. Thanks for watching. Thanks for listening. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.